Okay. Hey, it's Julie Ziemelis from 365 Hawaii, and I'm here with my favorite mortgage partners, Marla and Scott Wynn from the Wynn and Eagan Team. And we today will not just be discussing mortgages. We are going to go deep into the gritty of some of the stories that Marla and Scott have been seeing from some of their clients, and also a little bit more about. It's not just about mortgage rates, guys. It's not. So while we're waiting for a few more people to come on, we want to tell you a little bit also the fact that we are going to be doing a really fun little video after this is over. And I'm going to be asking these guys, what's it like living here after being here for 2 years? So that way you guys can have a little more insight into not just the newbie or the oldie, but somewhere in the betweeny. And so with these guys, they're going to give you a little bit more of the insights about life here on the island. So as we continue here, we're looking for questions for you guys. If you guys want to ask these guys questions, Eric Ziemelis, who's running the behind-the-scenes camera, will be doing that for us. And for those of you guys on YouTube, if you leave some questions in the comments, we will try to answer those as we get to them. But let's start with what people are kind of expecting, like what's happening with the mortgage market. So let's just at least talk a little bit about rates, just to get this thing started. So Scott, you want to handle that? What's happening just right off the bat?
Sure. So I mean, rates have been fairly flat for a while now. I mean, we saw a bit of a decline a few weeks back, and they've continued to decline just slightly, but all in all, we're probably sitting in the low 3s, high 2s, depending upon qualifications, occupancy, all those sort of things. So fairly flat, but if anything, on a little bit of a decline right now.
Which is good news, right? But as we've been talking about, it's not all about the rates. It's not about the rates really at all. So we're going to talk to Scott and his thought process of what if it's not about the rates, what is it?
So, well, I think that the reason it's not about the rates, in my opinion, is because rates are something you can't control, right? And when we do these mortgage updates, right, we're speculating to a degree. We're talking about certainly where we're at and what's happening in the market, but we're also trying to anticipate what's going to happen and
we should speculate about what we're speculating about.
Yes,
right,
exactly.
Right, and that's what you talk about how people on CNN or the financial news, they create these speculations and they speculate about speculation,
totally.
Right? And that
that's
creates
all
the news.
That's all that news is, right? I mean, it's like
you can watch for 5 minutes or 45 minutes, and you're still going to get the same information
because they just keep going around and around.
Yes.
They share about 2 minutes of information of real information, and then they speculate about that, and then they have people speculate about other people's speculation, and it just is like there's no real information there other than the first couple of minutes, right? And I know obviously that's what people must like to watch because otherwise the news industry wouldn't do that, right? So I understand that it creates ratings and all this sort of thing, but when it comes to buying a home and getting a mortgage, I don't know that speculation is all that helpful. I think instead what we should focus on are the things that we have control over rather than things that we don't have control over, right? I mean, we can't control what interest rates are or what they're going to do. We can't control what home prices are or what they're going to do. We can't control what inventory levels there are or what's going to happen, right? What we can control is our own situation, our own savings towards down payment or closing costs that we might have that we can set aside, or our own credit history and what we might be able to do to tweak things there. Because if rates go up or rates go down or rates stay the same, that is somewhat irrelevant, right? I mean, if you're going to buy a house and rates are generally going to fall within a range that makes it affordable for you, then wouldn't you rather, instead of spending time and energy focused on what might happen with interest rates and refocus that, put it towards the energy of focusing on something that you can control that might actually have an impact that you can almost guarantee rather than the unknown? And that's why I look at it that way, rather than worrying about
This is
speculation.
Scott Wynn giving you the zen on mortgages right now. So it's one of those things like, oh, just be.
Exactly.
So in that, when you say focus on things you can control, let's say like credit and everything else, this kind of always goes back to getting a hold of a really good person to tell you some strategies, so that when it is time to buy, you are locked and ready to go, right?
Sure, yeah. I mean, so there's a couple different ways. I mean, I understand that some people might be far enough out that they have no desire to talk to a professional because then they feel like they're committed or something along those lines.
Or they're just afraid to have their credit run, and we can address that too.
Sure. Okay. So there might be a variety of reasons why somebody might not want to contact a professional, and yet I still think that there's really no harm in contacting us way in advance and making a home purchase, even if it's a year or two, just so we can see what your situation looks like, and how we can best help you and setting you up for success, right?
Right.
But even if that's not the case. If you don't want to talk to a professional, I still think that there's lots of things you can do. And my suggestion would be to improve your credit position as best you can. So make your payments on time. Keep your balances at about 50% of the limit or less. But beyond that, really, my biggest suggestion when it comes to planning ahead for a home purchase and qualifying position is to save as much money as possible. And not necessarily put it towards debt reduction, because that's not always the best place.
Right.
A lot of times we focus so much energy on what our credit score is and getting the maximum credit score that you might be sitting at a 720 credit score, and yeah, you might be able to get to a 780 or an 800 credit score, but that's not going to do you nearly as much good as maybe setting aside an extra $10,000 or $20,000 that gives you a lot more flexibility to play with that and use it to put more money down, or to
outbid somebody.
Buy down your interest rate, or if the lender decides at the time that you're actually under contract that it makes sense to apply that towards a debt to boost your credit score to get you a better term on your mortgage, then you can do that. But if you've already used all your cash towards paying off debt or something along those lines, well, now that cash isn't there to do other things with that might be more advantageous. So my best suggestion would be set aside as much money as you possibly can when you think you're going to be making a move until the time that you actually do.
There you go. That's really good. That's good. Thank you. Because we, Eric and I, are looking to buy a home, hopefully in the near future, and we are actually using these guys, and they've got a secret weapon called Joe Egan, and we talk to him probably once every 3 months to kind of like make sure that we're kind of on the and something had happened in our financial experience, and I talked to him, and he was like, oh, you need your credit when you get your tax returns for next year, and he was talking about how do we structure our tax returns so that we are not taking too much money out when we actually apply for it. Another total strategy on making sure that you are actually applying for your tax returns. We're talking about this now in July, so we're prepared for this. So again, is getting all this great information up front instead of just focusing on rates. And then you were going to talk about how the credit score, when you get your credit
I think
dinged.
The largest pushback we typically get on completing an application is, well, are you going to do a hard pull on my credit? And this has become such a big thing in media, and people talk about it, but the people that are the most concerned about having their credit scores impacted are the people who are going to have zero impact to their credit.
No.
And it's because typically when you pull credit, it might impact your score by 4 to 7 points or so, and it's a temporary hit, and then it's going to... Well, probably
2 months?
2 to 3 months before it recovers, because you're inquiring about credit, so that has a negative impact. But it's so minimal. And Scott did a video at one time about what's a good enough credit score, and he has that on his YouTube channel. So just striving for like an 800 credit score or an 820 or whatever, it's anything over like 720 isn't really doing you any additional
good.
Yeah,
it's like trying to go for the A plus when B gets you ready to go.
And I talked to customers too who are like, I was just so annoyed that my husband's credit score was like 6 points higher than mine. It was like 810. I was like 804. I'm like, you're both good. But it has a very minimal impact. It's a short-term impact, and I think in the long run, the information that you'll gain by doing that up front is going to outweigh any hit it's going to have to your credit. Now, if you have really bad credit, if you have like credit in the 500s, or
you're not buying a house,
and when we pull your credit, it's going to have a bigger impact. But if you have a score that's in that range, you need a professional's help to figure out what you need to do to increase your score, and that's something that we help people do.
And the thing is, you don't even have to run a credit report. The lender doesn't have to run a credit report for a lender to help you with your credit, potentially, right? You have, per government and the laws in place, you have a right to get a copy of your credit report once per year. So even if you were so afraid of the inquiry and you were worried that that was going to set you back enough that it's not worth it to you to get that advice, well, you can still go run your credit report and then provide the credit report that you pulled to a lender. Now, they're not going to have the full suite of tools that a lender might have, because when we run our credit reports through our credit reporting company, we have different scenarios that we can run through. So we can actually say, well, what if we paid this credit card down $2,000? What will the credit score do? Or we can do the other way around and say we have $5,000 to work with. What's the best thing I can do with the $5,000 to give me the best possible credit score I can? And those are some of the tools that we have through our credit.
I thought Joe was pulling this stuff off the
And
top of his
that-
head.
oh,
There is technology
Don't
behind
tell him.
this.
Don't tell him.
Oh my gosh, I thought he was a wizard.
The cool thing about that second simulator that Scott mentioned too is that if there's going to be no additional benefit from applying $5,000 versus like maybe $2,000, it's not going to say apply the whole five. It's just going to say on this credit card pay this amount, on this credit card pay this amount, and the total is $2,100.
Wow. Okay.
But even if you don't have those tools, using Joe's expertise, using our expertise, and seeing enough credit reports over time and what happens and how things get impacted, you just start to get a better feel for what happens and how to best position your credit. So if we didn't run our own credit report, we just had the ones that you got for free, we can look at it and say, here's where I think you ought to apply most of your attention or your money or whatever it might be that needs to be done in order to fix things, rather than doing it on your own. Because a lot of times, especially related to credit, things that you think you're doing that are going to improve your credit may actually hurt your credit or hurt your qualifying opportunity. Because, like, collections are a good example. Sometimes people have collection accounts with balances, and they think, well, I need to get these taken care of once and for all. I'm ready to buy a house. And so finally, years later, after the collection account went in place, they pay off the collection account. Well, what happens is it updates on your credit report as recent activity.
Yeah.
So even though now it went from let's say $1,000 balance to a zero balance, which seems to be a good thing, it went from not active from 3 years ago to active today.
Oh,
well,
so
a
it pulls it in
negative
now.
active account, even with a zero balance, is going to impact your credit score more negatively than the fact that you paid off the collection account.
Huh.
So that's just one example, and there's many different examples of situations where you think you're improving your situation and you're actually hurting your situation. And that's where a lender can help you with really stepping through and advising you on the best way to go about doing it.
You guys, seriously, I wish I'd known this 10 years ago. So I'm so glad you guys do this, because I don't know about any of you guys, but we also had a short sale in our backyard. And we were thinking, oh God, we're never going to be able to qualify. And then when we actually sat down and talked to somebody just a year ago, he says, yes, it's in your background, but it's not going to ruin everything in front of you. And that thing sat on us like just a ghost for so long, and to actually talk to somebody who can actually tell you what the truth is. You make these stories up in your head about what your background is, and then when you actually talk to somebody and you find out, I wish I talked to somebody sooner. So again, if you guys, and again, this isn't just even about credit rating. If you guys just have any type of just questions about how to get to the point where you're in the best position to go after a house, these guys are amazing. And let me ask you also, when you say a hard pull on your credit, compared to a soft pull, what does that mean?
So a soft pull doesn't impact your score at all.
Okay.
It's just on the back end. So an example is we can do a hard pull on a credit report, and then if we recommend you make changes, then once you make the changes, we can do a soft pull, which basically just looks at the changes that have happened since the hard pull and scores based on the changes.
No.
But we can't use a soft pull
Right,
for the
correct.
purpose of qualifying. So
Yeah,
we
okay.
have to do another hard pull if changes are made and we want to use the updated score.
And that's
But
what
the soft
you use
pull-
for the pre-approval for a house.
Right. But
Okay.
the soft pull allows us to see if we're going in the right direction or if it's time to make the hard pull.
Oh,
Right.
okay.
So
Yeah. It's really valuable when we're working with somebody for a long period of time, and we can keep looking at it without impacting their score negatively.
Good stuff. Eric, do you have any questions?
Nope, no questions.
Eric's sitting over there with his little feet up on the thing. Well, we're draining this amazing information from our two mortgage people. Eric has his feet up.
I
So
thought it was quite good, actually. No questions, though.
okay, so
I'll just bring it back to the speculation versus the planning, right? To me, it just provides peace of mind. If you're sitting there and speculating, I think that can be very stressful, especially when you're planning a home purchase and you want to make a home purchase, you want to make a move to Hawaii, and all you're thinking about and worrying about all the time is what's inventory doing and what are houses prices doing and what are interest rates doing. It's stressful, and it's stressful because there's absolutely nothing you can do about it. But if instead you start focusing on where you can do something about it, whether it's slightly improving your credit score or just increasing your cash position or just going out and looking at houses and making offers, right? I mean, all those things you have control over, and I think it eases the stress significantly rather than worrying about all the things that you don't have control over.
right, and I'll tell you too that when someone puts a goal in front of you and you can say, "Oh, I need to have this much money" or whatever, it gives you something to strive for too.
Yeah,
It's like
absolutely.
this energy, focus, intention thing. But Marla and I were talking about the fact that they're worried about the housing market with the inventory and with mortgages and stuff. Tell them a little bit about the whole, like, the that people are actually buying houses with mortgages, right?
Right. I mean, there is limited inventory, but somebody's going to buy the house. Why not you? I mean, if not you, who? If not now, when?
Right, exactly. So you have to have a good attitude about this too, right?
Right. Well, I'm a strong believer in energy, which I think partially is what drew me to this island. But I really believe, and you can think it's hokey or not, but if I put the intention out there that what I'm looking for and that I'm going to find it or it's going to happen or whatever, it happens.
Yep.
And it might not happen when I expect it to happen or when I really think this is the one and it should happen, but it happens when it's supposed to. And I've actually shared that with some of the buyers that you've brought to us. And we had some over here for dinner on Wednesday night. I won't say who. And they were like, oh my God, when you said that, we started focusing on it and then it happened.
Wow, really?
Yeah. It
Wow.
just gives me chills because it does happen.
It does happen.
Just put the intention out there. This is what our intention is. And then be motivated and don't give up.
Yeah.
I mean, you can't. It's not all hokey. You have to do the work too.
Yeah.
And
you can't.
It's not all woo woo.
Right, and you can't believe that going in with a low ball offer is going to help your position.
Oh, that's not gonna happen right now.
Lance was talking about somebody coming in and saying, "I'm going to offer lower than asking." And he's like, and they're like, no, we're going to do it. He's like, and then of course they did, and they didn't get it. So the next one, they came up a little bit, as they say here now, bring us your best and highest offer. Yeah. But I was just talking to somebody today who's moving here from Canada, and she said, I feel called to this island. I feel there's an energy pull to get me there. And I'm like, well, then ask for help. Right? I said, go to she's in the Hilo area. I said, go on to the Kona Hilo, the 365 Hilo newbies group and ask for people to help you. Tell them what you want, what you need. Mm-hmm. As soon as you put it in writing and send it out to the universe, amazing things start to come together to help you make it happen.
Yeah.
Right?
Right.
So,
plus if you don't tell anybody
right.
that you need help, nobody's going to be able to help you.
Yeah. And you know what? It's interesting because energetically, again, that people like to help other people.
It's true.
You help their elevation of their consciousness level, too, when they feel like they've done something to help somebody else achieve their dream.
Reciprocity.
Right. So it's almost like, don't feel like you're taking from somebody. You're actually giving them an opportunity to actually feel like they're helping somebody get what they need. Because it all comes back in at the bottom part, too, right?
Right.
Yeah. Okay, we're going to get a little crazy with you guys, but I think most of the people on this are also people who are called to the island. And literally, the energy flows on this island faster and harder than almost any place else. So faith in just putting it out to the universe, I think, actually it's a strategy.
It is
just as much as getting a good credit score going and getting some financial strategy. I think that, and I'll just put it out there. Intention works. So I brought these guys into my life. I said, damn it, I need some help. And then you know what, you guys, I'm telling you, with Scott, he has been helping me with the technology background on a lot of this stuff, and it's just been it's let us get to this point where we're actually putting you guys on Facebook, putting it on YouTube, and then putting it out to a website. So again, there's just been so much goodness, and if you become a member of the Kona or even Hilo community, the people that you're going to meet are the people who are going to resonate with what you're trying to do with your life too. So.
I will just speak about living here for a second. Like, we've made closer friends since moving here over 2 years ago than we ever made. I was in Colorado for 21 years. And I had friends, but we didn't have, great friends that we could just get together with and hang out with and play games and, just, commune with. It's really cool.
Yeah.
Yeah, there's something about this island. People just, I don't know, we're happier here.
Yeah, yeah. Well, and again, just like again, when I think I did a blog post on the kind of people, the six characteristics you need to move to Hawaii. One of them is definitely people who have an adventurous spirit, right? And then people who like to like the outdoors, right? And have this feeling of I need to do something big with my life, And the people that have that whole attitude, I think, are connecting with us. I love the people here too because they're a special group of human beings. They're willing to move 2,500 miles out in the middle of the Pacific Ocean. Yeah. And they have to have some level of faith, right? And they certainly have to have a level of drive and intention, right?
Totally.
So the ones that are winning in this market are the ones who just keep going at it and say, you know what, maybe I didn't get this one, but if I just keep going, it's going to happen for me.
Yeah. Even if you live in your car, you still got to do more than you have to do to live in your car on the mainland somewhere. We're not suggesting you live in your car.
Don't live in your car. Don't live in your car. Even though the rental market's tight, I get it. So, question.
Okay, does lack of mortgage debt have a negative impact on one's credit score, and how does that impact a loan rate?
So,
I mean, if you don't have a mortgage already?
Does the lack of mortgage debt have a negative impact on one's credit score?
So I think the situation would be somebody that is renting who doesn't have a mortgage, or somebody who owns a home and has their mortgage paid off,
Or at least they've been paying into it, yeah.
So the quick answer is yes, it can have a negative impact, but I've seen people without mortgages that have 800 credit scores. So it's possible, but a mortgage debt can help to boost your credit score in some cases. Mortgage debt and installment debt is really the best kind of debt. Those are the debts that have a definite starting and ending point.
The set payments.
So that would be a mortgage, student loan, a car loan, things like that is the best kind of debt to have. So if you don't have a mortgage debt, generally I would recommend having some sort of installment debt if you can, or something like that, for the purpose of credit. But even so, you can still have really good credit even without installment debt. So it's really mortgages are the best type of debt. Installment, like car loans, student loans, and then credit card debt after that, and then finance companies and such. You know, the companies that say we'll give you 0% interest for 2 years or whatever if you get our credit card or whatever. Those are the finance companies. Those are the worst kinds of debt you can have on your credit report.
I just got an Alaska card.
It's not necessarily a negative type of, like an Alaska card is going to be a Visa credit card. That's going to be more of a credit card.
Right, because I'm trying to get
if you're going to
points.
If you're going to like a furniture store or something like that, and the furniture store offers their own internal credit card.
Zero financing for 9 months.
0% financing
Yeah.
for
Yeah.
that's what I'm talking about in terms of a finance company.
Okay.
Those are the worst kinds of debt. But it doesn't necessarily mean that because you have that debt, your credit score is going to drop. It just means that it's not going to give you as good of a return as you would for a mortgage or an auto loan or something like that. So the answer, I guess, is even if you don't have a mortgage debt, you can still have very good credit score.
And the mortgage companies will look at that and be okay with it?
Yeah.
Okay.
Mortgage companies don't care whether or not you have current mortgage debt or not.
Just pay your bills.
Exactly. That's the biggest thing. If there's anything to take away,
Just pay your on time.
On-time
On-time,
payments. That's what
on-time
matters more than
payments.
anything else.
That was a question.
Okay.
All right.
So Eric Ziemelis,
Yes.
because you are in the middle of all of this, do you have like questions to ask these guys, like or thought processes that you want to throw in? Just because we're looking for a house in the future, and we've had 3 or 4 in the past.
No.
On the spot.
Eric Ziemelis on the fly.
Yeah.
I'm like deer in the headlights on this.
I wish we could have turned the camera around.
You guys, he's like, most moderators, that's the worst thing you do to somebody. I'm sorry. But, okay, so as we're talking about the realities of mortgages and stuff, one of the things that, again, we keep talking about is that people are saying, well, if you keep talking about how hard it is to get a house because most of the people are cash buyers, what's the story? You've been hearing about this. What's the story?
Well, so Lance hasn't run the numbers recently, but 2 months ago when we were talking about this, he said 60% of the properties being sold right now are still financed.
No.
So it's not like everyone is paying cash. Mm-hmm. Some people are paying cash, but a lot of people are still financing. Mm-hmm. So I think it just comes down to the cash position that Scott was mentioning, having a little bit of extra cash above and beyond what you need for the closing costs and all of that, so that you have some options where you've got some leverage. Mm-hmm. But people that are, we're still closing mortgages here, so I'm fairly confident those people are buying houses because we're doing the loan. So
okay.
Yeah, I would just encourage people to just get going and try to stay motivated and not get discouraged, and just know it's going to take a little bit of time, but focus on the intention and not on...
And nothing is permanent,
negative.
Right?
Right.
So even if, I think it has gotten a little bit worse, I think less than 60% are now financed, but that's going to shift. And we're already seeing a shift on the mainland in terms of real estate and the amount of inventory that's opening up. Mm-hmm. And so that shift will occur, and that will occur here. And that shift will happen, I believe, faster than what mortgage rates will and things like that. But again, that's all speculation, right? Mm-hmm. So just keep pushing, keep doing all the things that you can control, and keep dedicated and that vision and that energy towards making the home purchase, and it'll happen. I mean,
And if you don't live here now, but you're thinking about moving here, you need to exercise patience anyway.
Right.
We're going to talk about that a little bit in the next video.
That's right. So,
So I have two questions here for you
Okay.
guys. One is, are Section 184 loans available in Hawaii?
I'm not sure what a Section 184 loan
It
is.
says Native American loans.
Got it.
Oh.
Yes, but it's so yes, they do exist, and we don't do those, so I'm not familiar with them.
yeah.
Okay,
But they
great.
do exist here on the island.
Yeah.
Okay.
And then I got another question for you. It says, what down payment percentage do you recommend to be competitive?
I personally don't think down payment percentage matters as much as the offering price, coming from my perspective as a mortgage lender. We might ask that same question of Lance or another real estate agent and get their perspective, but here's the way I look at it. Like, as a mortgage lender, if I were to look at the risk, if I were selling my house and somebody was buying my house and they had a 5% down payment and somebody else was offering me a 20% down payment, I don't know that I would necessarily care the down payment percentage. And in fact, in some cases, I think that having less of a down payment can give you some flexibility in terms of maybe they're reserving some cash position to overbid, or maybe they have some reserved cash position that will improve their finances, or whatever it might be that I don't know
Or hit
about.
the appraisal gap.
Yeah, or appraisal gaps, right? So I don't know that it really matters, at least from my perspective as a mortgage lender.
I would agree with you as far as down payment goes. I think that sometimes as a seller, it might be tempting to take a cash offer, but cash buyers, I mean, everyone loves cash buyers, right? But they have so much flexibility and leverage that they can easily get in and out of things. Whereas I feel like people that are putting minimum down on a home, like they want that home. They're vested. Like once they're in escrow and they've done their inspection, they are like more driven, I feel like, emotionally to get to the end than maybe some cash buyers might be. So I would go for price all day, every day. As long as they had a good, strong lender letter and I felt confident that it was going to close.
Yeah.
Like you're not going to take a 5% down conventional over a cash buyer if you're worried about the financing.
Right. And also, we talked about this in our last video with Lance, is that a lot of these different offers are not even just about the money anymore. It's, am I going to rent it back to you for 2 months while you're trying to I'll take all your furniture. You can leave without sweeping. I'll do everything for you, and it's not about the money.
So does it become more like the buyer's agent's responsibility then to try to find out from the listing agent what's important to the
them.
seller?
Yep.
So that they can structure their offer the right way.
Yes. And so that's just it. So now in this market, that the way it's going is that sellers have told their agent enough about, well, I'm trying to sell this house so I can go do something else, or I'm selling this house and I really wish that somebody who got it was from the area, because we also saw where one person put more money in, but the seller made it so that it could go to somebody who actually lived on the island already. And so sometimes you don't know. And so sometimes it's not about the money. But obviously you still want to be able to close on the house in a certain time. So I just think that there's different things that we're looking at here than even 6 months ago.
Sure.
Right.
And it's probably going to continue changing, but we should speculate about that.
Yeah, so we could be CNN. We could be Fox News. We could be anything. So we are going to wrap this segment up. We will continue to discuss living on the island in our next video. We'll put out after we finish this. But we do this probably around the fourth Thursday of the month. As you guys know, we try and do the housing market update around the first Thursday of the month, and then we have a second one. So then we have a second is usually mortgage, and the third is a third Thursday where we have a panel discussion. So if you are new to this page, we are trying to do these kinds of things almost every single Thursday of the month to give you guys some information about what's happening in the mortgage market and give you a chance to ask questions live. And for people on YouTube, if you want to be part of our live discussion, please consider joining our 365 Ohana. And you can get more information about that by going to movetohawaii365.com and click on Join Ohana. So with that, thank you both for being here and joining us with your information, and we'll see you guys next time.
Aloha.
Aloha.